Again to talk with you guys on behalf of Family Credit Management, and today we're going to cover some topics that relate to finances, debt, budgeting, all of those things that people have questions about but you don't know who to ask. And I just want to let you know that if you have any questions, you can reach out to a counselor at Family Credit Management at 800-994-3328. We've got counselors standing by and they're available to answer your questions. You can go online and chat directly with the counselor. Ask them your questions, ask them about your budget, get the resources that you need, and get the help that you need. And that's the best part about being able to have them as a resource. When you've got those questions and you don't know who to ask, Family Credit, reach out, familycredit.org. So today we're covering a few financial topics, and this is at the height or the beginning of Financial Awareness Month. It's coming up in April. We're just coming off of the time where everyone's looking to get their W-2s, their 1099s, get everything filed, making sure that everything is in so that you can get your income tax refund and use that responsibly. So there's a whole month of April dedicated towards financial empowerment, learning more about your finances, and just being more in control and financially aware and sound. We want you to have a strong financial backing, a strong credit profile, a strong financial profile overall. So when you think about your financial profile, it's not just credit. It's not just a budget. It's that whole piece together. We're thinking about your credit. We're thinking about the budget. We're thinking about, do you have protection, life protection, insurance? Those are things that you want to consider because that's part of your overall financial picture. Do you have your debt together? And part of that also is your mental awareness and your mindset towards money. I know growing up, a lot of us, we didn't have a strong financial background. We weren't taught those things about money. And so nowadays things are starting very much just starting to be talked about as far as with the younger generation and trying to get them into paying attention to their money, their credit scores at an early age. So while that push is going on, guess what? Those of us that have been here before, that have been here for some time, we're still struggling to figure things out. And that's why Family Credit is a resource. That's why these platforms exist. And that's why I'm here today to talk with you about those things that you may need, those questions that you need answered so that you can have a strong financial profile. Again, it starts with that mental health piece as well, because a lot of times, think about this. When you have a lot of debt, when you have a debt that's gone bad, when you're dealing with collection agencies, a lot of times that plays a heavy toll on your mental mindset. It causes you to stress out. It can cause chronic illness. It can cause some long-term health issues, and we don't even think about it or figure out where those triggers are coming from. And a lot of it stems with money. A lot of times we struggle saying, hey, if I just made a little bit more, I'd be okay. If I was able to make more, I'd be happier. I wouldn't have to worry about these things. And think about this. Every time you got a raise over the past few years, over your lifetime, did things really improve for you? What we need to realize is that it's not in the amount of money that you make, but what you do with the money that you bring in. We want to be able to control everything a little bit more, paying attention to the output, paying attention to the debt that we have, paying attention to our utilities and our bills that we have to keep those under control and make sure that we streamline as much as possible. We want to make sure that we're taking those things into account and we're being cautious with our money and our spending. One of the things that I helped or that we talked with the past few weeks with some consumers is realizing sometimes instant gratification isn't really all it's cracked up to be. And you may say, okay, what's she talking about now? And what I mean with the instant gratification, us being able to save for an item that we want and achieving that goal of saving, or Do we find out a way to get what we want now and everything else we put in jeopardy? And we find a lot more people doing that second part. We're finding a lot more people falling victim to instant gratification, trying to get those things now. Now you may say, well, what ways are people doing that? And when you think about it, we are built up in a society where instead of us trying to afford the item we want, what we're looking at is, can we afford the payments? Think about it. People are paying maybe $800 or more for a car note. Can you afford that payment? You may say, oh, I do want a $50,000 car. I do want an $80,000 car. But then when they actually come back to you with the payments, they are astronomical. I've seen some people pay as high as $1,400 per month just for a car note. Now, here's the thing. Some people aren't even paying that amount for rent or mortgage. Most are, but keep in mind, some people aren't. And this is just for a car. This is not for a house. So is that something that we want to train ourselves to try and stretch our budgets for? Or do we want to be a little bit more conscious of our financial decisions? Maybe instead of looking at that $180,000 car, we want to look at something that could be in the 20s or even less than that, because it works with our budget, because we're able to afford the payment better. Not that you can't afford a $1,400 car note, but think about it. Would I rather have a $300 car note or a $1,400 car note? For me, I want the $300. So I want to make sure that with my decisions, I'm being more financially savvy and being more financially responsible with those decisions. Even though I know I can afford that payment, do I really want that amount coming out of my budget each month? Or can I take that additional money and put that towards my savings goals, put that towards my financial future, put that towards my protection, make sure that I'm better off financially? Again, we're thinking about, hey, can we afford those payments? Looking at your phone bills now. A lot of people I'm seeing paying $200 or more for phone service. And there may not be a lot of options, but we still always want to keep in account our finances. So every now and then, maybe once a year, go through, audit a bill. And you can even set it for every month. I'm going to audit a different bill just to make sure things are on track. Think about this. It used to be years ago, right? Our bills would come in the mail. We would get the bills, we would open them, we'd see what's going on, we would see the little charts, the graphs, we see all of the fees and services, they'd be right there on the page, they'd be listed. We knew how much everything costed. We may not have liked the number, but it was there for us to see. Now, how do we get bills nowadays? Everything comes electronically. You have to sign up for auto pay to get a discount, and then if you sign up for paperless billing, it saves you even more sometimes. Or it might be seen as a convenience. But when you get those paperless billing notices, when you get the notices each month when you get your bills, are we clicking on them to open them and go through the bill? Or are we just simply doing the pay now? Let me pay this bill. It says that I owe $100. Let me go ahead and pay that $100 now. The reason why I caution you to every now and then, again, you can do a different bill each and every single month. Look at those bills, click on it, and see what it is that you're being charged for. Because just because I tell you that your bill is $100, if you don't look at it to verify it, to know what's being charged, how will you know that amount is correct? A lot of times we see unnecessary charges on these bills as well, and we don't even question it. We don't say anything. We just pay it. But take a minute, go through these bills and see if there's any extra services that you are not familiar with, and you call them. Call your cell phone company, call your utility company, and find out what that is. I know that on some of the utility companies, the gas companies, they were charging for people to come out each and every single month. They had a separate charge, a comfort line charge, and said, hey, this is our fee, just in case we have to come to your house each and every single month, but we charge you $10 a month, and it's on the bill. But if no one ever questioned it, they could make hundreds and hundreds and thousands of dollars just from this little bitty charge. You might think it's nothing, it's just $10. I don't know what it's for, but guess what? You probably don't even have to pay it. So call them, figure out what those charges are, and see If there's anything that they are charging you for that you can have taken off of your bill, or look at budget planning, see if there's a way for your bill to be reduced. And sometimes they could have your meters wrong and indicating the wrong type of service. You might be getting overcharged and not even know it, because we're not looking at our bills. We don't pay attention to the meters as much anymore either. So these are things that we want to keep in mind as we go through our bills. So a lot of times automation is a great thing. I want you to know automation, I'm a huge fan of automation, but we have to take a step back every now and then to make sure that we are doing the proper evaluations to make sure that we're financially fit, sound, and stable, right? So go ahead, look at those bills and keep those things in mind as you go throughout this month. Even there's so many other tools that are available to help you keep track of things too. So you want to see what works for you and stop looking at what the payments will cost you. Make that decision of, do I want it now, or can I wait for it? Can I plan for it? Can I save for it? Another case in point, we've got a huge rise in buy now, pay later accounts. Now, these are the Affirms of the world. These are, Klarnas. Everybody's using all these shops and Afterpays and all these things, and they're using it to their benefit. It's there for a reason. It exists because there's a huge market for it. But how is it affecting you? Again, it's training you to think about the payment. If an item costs $400, now you're saying, it used to be I'll save up the money each and every single month till I got to 400, then I'll go out and then I'll buy an item. But more and more we're switching to the mindset of, well, it's just $100 every couple of weeks, so maybe I'll do that. And you would say, yeah, that seems harmless, right? The problem with that is a lot of cases, it gets out of control and it becomes more than we are even able to handle. So we want to think about it. Again, our mind has been trained to look at that payment. $400, $100 every 2 weeks, every month, however they set it up for you. But if you've got all of those, if you got 6 or 7 of those things going on, what happens is now our paychecks are spent even before we can pay our bills. Before we get the paycheck is mostly gone. It does not exist anymore because you have to pay them back and them back. And you want to stay on point with this person. You want to make sure that this debt is paid because they'll bill you again in 2 weeks or in a month, however long it's set up. We've conditioned ourselves to be okay with that monthly payment. And guess what? It affected your monthly budget, because a lot of times during that time, we're not thinking about those things that we're doing as well. Taking stock of, okay, I just bought this. Now that means that I can't go here, or I need to save money here because I already spent this money that I thought I had allocated for something else. Or have you ever found yourself, you'll get something and then an emergency pops up? You get a flat tire, you run out of gas somewhere, or you have some issues in your home, there's a plumbing issue, your heat went out. All of these things happen, and it seems like a lot of times it happens the moment we've had some money and we just spent it. So if we're looking at ourselves and we're conditioning ourselves to say, let me not think about the payment aspect at all. It's a matter of, do I need this now? Can I wait? Do I put my needs over my wants? Yes, we do. We make sure that we have everything we need in the course of the month, make sure all of our bills are paid, then see what that discretionary income is, or the amount that's left at the end of the month after you've paid all of your bills and all of your expenses. And then you can begin to see, okay, what is it that I can do additional for that? Again, all in that shift from your mindset, conditioning yourself not to look at the payment amount and be okay with the payment amount, but knowing that if I were to do this, that money is already gone by the time I get my paycheck, and now I'm short. So what am I going to do in that instance? It's best to avoid those as much as possible. So if you can figure something else out, if you can discipline yourself to save, and I think a lot of times when we actually get on the fast track where we can start saving and we see ourselves saving money, we love it. How much does it feel? How good does it feel when you sit around and you see that, man, I've got an extra $100 at the end of this month. I was able to save something. I paid down my debt and I still have some money left over. I want to go and spend it, but I'm not, because I've disciplined myself to say, I like watching that money grow a little bit more than I like going ahead and spending it on this item or that item. So keep those things in mind. If you need some help, you want to establish your budget, reach out to a counselor, familycredit.org, or dial 800-994-3328. Again, we're talking about being financially fit, financially stable, making sure we have a good solid base and a financial profile, financial credit profile. We want to look at your credit. Credit is so important nowadays. And keep in mind that every time something happens in the world, every time the government does something, they're going to release a new score. They're going to update the score. They're going to make changes to the credit bureau system. That means that something changes with our scores. We'll have a new model, and our score will have a new score. So they just keep getting added to them. Your mortgage score is different from your regular score that you see on your credit report, which is different from anything that you would see on like Credit Karma or Credit Wise or like your banks use. You want to keep all of this in mind, but you want to be able to use it as a base to keep your score positive as much as you can. Again, keep in mind that your score only looks at the last 24 months worth of history. Even though your report stays with you for years and years and years, your score just really looks at the last 24 months worth of history. So it's what can I do now to positively affect me for the future? If you know you have some bad debts that are charged off, if you know you have some things that have gone wrong, some things that are overwhelming to you, that's what the counselors are there for. They can help you set up a plan or devise a strategy to go and look at your debt, get out from under it, and have a strong financial footing. Now keep in mind, it takes discipline. It takes work. It does not happen overnight, but I want you to know that once you sit down and you actually begin to do that and work through these things, you'll feel better. So we've talked about you establishing a savings, looking at the amounts that you're spending, looking at your needs versus your wants, and now looking at your debt so that you are not overwhelmed, so that you're more prepared. And then we want to think about our future, right? Future is so important. We're living for today, but we need to be prepared for our future. There are different ways to make sure that in the future we are okay. There's different tools that we need to take advantage of as well. So think about this. You've been working all your life. You work very hard, and you've worked for a company for over 20 years. You love this company. You can't see yourself going anywhere. I mean, this company, like, they run through your blood. And then something happens and you lose your job. We want you to be prepared for the unexpected. What happens at that point? Have you invested in yourself? Have you used whatever resources that they may have for retirement? Have you invested in your future? So these are things that we want to think about every single day, making sure that we're putting a little bit off to the side. $5 every single week can add up. If you're taking $5 and you're adding to it, you setting the stage for yourself to be more financially fit. You'll be able to invest that money, and each year you're continuing to do that. You're going to make yourself so proud at the end. So you want to keep all of these things going, keep all those things in mind. Now, another financial tool that a lot of people don't want to talk about is insurance. And life insurance is there for a reason. It's there to assist us in case something were to happen. If you were to pass, if a family member passes away, how will you handle the responsibilities that they had? How will you be able to care for yourself? A spouse, husband and a wife. If the husband passes away, we want to make sure that the wife is okay, that if she is not the breadwinner, or maybe they both were equal breadwinners in the home. But if the husband passes away, now you're just down to one income. You want to be prepared for something like that. And so there are different vehicles that will help you to prepare for those stages of life. You can look at an insurance policy. You can look at setting up trusts, annuities. All of those things are vehicles that you should be exploring, especially if you are at the point where you have a little bit of money left over. You want to make sure that you're covered, and you want to make sure that you're financially sound. Also, there's different types of insurance that you can invest in. But you need to sit down with someone that knows what they're doing, that's licensed, that will help you through all of this information, because it can be overwhelming when you're thinking about it and you're trying to go for it. Now, with insurance, the main two types of insurance that people look at, they're either a term or a whole life policy. When you're thinking about a term policy, it really is just what you say, kind of like a loan. But what you're going to do is you're going to get a monthly payment. You're going to come up, you're going to use your agent, your broker, your insurance agent or broker, whoever you may be looking at. You might even go and get a quote online, whatever comfortable is for you. You want to look at the amount each and every single month that they say you need to pay. You're going to pay that every month, and they will give you a term to pay it. It could be 10, 20, 30 years. And this is the amount that you're going to be paying consistently every month. Now, for some people, depending on how your finances run, it might be a good idea to see if you can do quarterly payments or even annually payments. Let's say you get that income tax refund. You want to make sure you're not struggling in the course of the month to pay this each and every single time. You might look at doing it annually when your income taxes return comes in. And that way you don't have to stress about it during your year. Every single year, this is what you're going to do. This is your plan for your refund. You know the amount that you're going to pay because, again, it's going to be the same thing for the next 30 years. And a lot of times what will happen is they can give you a discount or a cheaper amount if they know that you're going to be paying annually, because guess what? You've covered everything up front. You don't need to make a payment till the next year. So that's kind of like what you're going for. You want to make sure that you make these decisions, that you look at your finances. You want to look at the flow of your budget and see, can I afford something like this monthly, or would it work better for me annually? Again, things that you don't necessarily think about all the time. So you want to get that going, and then you want to look at the policy terms. So with a term or whole life policy, you want to know what happens and when they will be able to pay out. You want to be able to select if something were to happen to you, if you're getting the policy for you, who would the money go to? Where would it be designated? Who would it cover? And what amounts the person would receive. So we'll just use a $50,000 policy as an example. If something were to happen to you, you would select someone to get the whatever proceeds from this account, and that person would be called your beneficiary. The beneficiary is who the checks get made out to if the inevitable happens. So they would get that $50,000, or you can say, hey, I don't want it to go to one person. I want to split up. I want it to go to 3 people or 4 or even more. You get to decide how you want that and what percentage you want each person to receive of that $50,000. You can say, I have 5 people. I want to receive $10,000. Again, still not a lot, but if you were to pass away, that would help cover some of the expenses or lifestyle choices for at least the upcoming year. And you want to think about it too. If something were to happen to me, how long would it take the other person to get on their feet? And essentially, that's what this policy does. It's buying them time until they can care for themselves or be good on their own. It's not meant to be something that's going to make someone rich really quick, because it doesn't happen like that. You're thinking about this. Even if this is $1 million policy, that's one time. You've got the rest of your life to keep living if something were to happen to your spouse. Would you be able to sustain on your income then? And the answer most of the time is probably not. So then you want to see, how much do I need for the next 20, 30 years or so? And that's what we're going to set our policy up on. That amount, not necessarily whatever they're trying to sell me. So think about those things. You want to make sure you've got your insurance policy in place, and then that's with the term policy. You can go for a whole life policy, which at the same time, you're paying this each and every single month. But as you do it, this policy is gaining cash value, meaning that there's a cash component building up every single time you make a payment. Some of it is going towards it. Your interest is growing on this, and this is something that you will be able to borrow against. You want to figure out what those terms look like for you to borrow against this policy. If it's possible, how many years do you need to have that policy in place before you can do that as well? If you've got questions on establishing your financial future, your credit profile, all of that, your plan, you want to reach out to Family Credit and talk to a counselor. 800-994-3328, or go online to familycredit.org. If you want to use the website, there's a tool there that's called Personal Finances Made Easy. This guide will have the information just on everything that we talked about, your budget, your credit, life insurance. It has all of that in there. Investing and making sure that you are protected for the future. So reach out, download it off of the website, or call them. They will mail it out to you for free. Again, this information, I hope it was able to help you. I hope that this information is seen as a resource for you. And if you have any questions, feel free to reach out. We will be back next time. You guys take care.